Hello, and welcome to this virtual training session for SNPS chapter volunteers. Today's topic, a guide to effective budgeting, as presented by yours truly, Antonio Payne, Controller, here at SNPS National Headquarters. Over the next few minutes, we will discuss in general terms the what, the who, and the how of not-for-profit budgeting, and hopefully help your budget process just a little bit easier at the chapter level. First, the what. What is a budget? A budget is more than a piece of paper with a bunch of numbers on it. A well-thought-out budget is essentially your game plan for the year. It is a financial benchmark for what you hope to accomplish in the coming year and how you plan to do so. Your financial plan should be tied with your chapter's overall strategy in order for your chapter to thrive. Who should be involved in the budget process? We say absolutely and emphatically everyone. Each individual who takes on a role as an SNPS chapter officer does so in a volunteer capacity. However, your role in the chapter's success is no less critical than it would be if you were representing a Fortune 500 company from SNPS's perspective. It takes a special type of individual to volunteer on any level, but especially to step into the finance arena. The fact is, there isn't much volunteer at all about serving as an officer in any organization, be it volunteer or otherwise. As officers, you have accepted fiduciary duty for the financial stewardship of your chapters. A fiduciary is defined as a person given the power to act on behalf of another in situations that require great trust, honesty, and loyalty. It is therefore incumbent upon you to surround yourself with as many capable and energetic people as possible in order to map out your chapter's financial game plan. Forming a finance or budget committee is a great way to share the load. That committee should be comprised of individuals with diverse skill sets and ideally would be anchored by the treasurer of your chapter. More about the who. Who are the major players in budget formulation? Officers. Officers must understand the big picture. Understanding the chapter's financial history is a great foundation for doing just that. What are the chapter's major income and expense drivers? Which programs have been successful? Which ones have struggled, and why? Are there ways to improve those, or should they be eliminated? What other opportunities might be out there that are worth pursuing from the chapter's perspective? Ultimately, the officers of the chapter will be responsible for drafting a budget and for the results that follow. The chapter treasurer should possess a level of accounting and financial knowledge that allows he or she to inform and educate those, shall we say, less financial members of the chapter. The treasurer is generally responsible for compiling the budget and for periodic financial reporting, both internally and externally. Program coordinators. We are in the business of serving our members. If there is one person in charge of the educational programming for the chapter, that person should have intimate knowledge of the types of programs our members want us to provide and the financial impact each program might have on the overall budget. That means the coordinator knows what each program should generate in revenue and how much each program might cost the chapter to roll out. Now, depending on the size of your chapter, officers and program coordinators may be one and the same, but that's just fine. Lastly, anyone who plays an active role in either generating income or making expenditures should be a part of the budget process, whether that's the person who's in charge of the IT, if you guys have a website, or the person who's just in charge of ordering supplies for the chapter. Being involved in drafting the budget helps each person become a stakeholder in the chapter's financial success. One of the major components of a sound financial infrastructure is a good accounting system. At National Headquarters, we use QuickBooks software. We are in no way paid endorsers of this product. There are many different brands of software out there that would and should serve your needs. Most, if not all of them, will create and send invoices, manage and pay bills, allow for interactive and online banking, and of course, produce standard financial reports, including budgets. We chose QuickBooks because it's fairly user-friendly, great for small to medium-sized organizations, and one of its best features is the ease with which you can export reports in Excel in order to work with them. As part of our discussion today, we will be looking at 3 variations of the same budget that would have been exported from QuickBooks into Excel. The first report is a detailed budget report, which is a comprehensive report and allows for greater scrutiny of individual line items. The second report is a summary report, which is a high-level roll-up of all income and expenditures. And the third is a program budget report, which helps foster better decision-making by allowing you to look at individual programs and how they impact the budget. Here's our first report. This is a detailed report for a fictitious chapter called Great Chapter. It is a sample detailed budget for the year ended 8/31/2014. This budget contains 4-digit account numbers, which provides flexibility to add as many accounts as may be necessary. The accounts are grouped in a manner that flows and makes sense. This particular report is a 2-column report that contains 2013 actual numbers right alongside the 2014 budgeted numbers. Total income is made up of 5 different major account categories, which are delineated here, just for the purposes of this report presentation. They are membership, program services, event income, marketing and publication income, and other S&PS income, which relates to our investment reserves, which we will discuss a little bit later in this presentation. Similarly, expenses are grouped in 5 major categories. They are program expenses, contract or outsourced services, travel and conferences, marketing and publication, and general expenses, which are a catch-all. These are some of the accounts that you might see under general expenses: staff development and training, accounting services, legal, supplies, postage, printing, dues, telecommunications, bank and merchant fees, insurance, and other expenses. This sample budget shows total revenues of $81,000, total expenses of $64,000, for a net budget surplus or net income of $17,000 projected for budget year 2013-14. As you can see, based on actual 2012-13 numbers, this particular chapter had a net income of $15,150. Don't be afraid to challenge yourselves to improve on past performance. In fact, it should always be a goal to meet or exceed expectations and previous year's performance. In terms of this particular budget, you have to be realistic as well in that this particular chapter, as you'll see a little bit later, is a smaller chapter. They only provide for a certain number of programs, so their ability to be flexible and or aggressive in their budgeting is slightly more limited than it would be if it were a larger chapter. So be realistic, but also challenge yourselves in order to exceed your expectations. Please keep in mind that this particular budget is simply a model. Your chapter budgets may be similar to this. They may look almost identical, or they may be very different. There are many different ways to set up a budget structure. Whatever works for you guys generally is fine, but this is what you might typically see in a chapter as far as the budget goes. Next, we'll look at a summary budget, and here you have it. We have the same two-column budget, which is 2012 actual versus 2013-14 budgeted. We've added a notes column. A notes column is a great way to provide additional information as to what might be behind the numbers themselves. As you'll see, for program service revenue, we have $40,000 budgeted, which is based on 4 programs we're providing. Event income is based on the following inputs, and so on and so forth. In terms of expenses, program expenses are comprised of speakers and food and beverage. Contract services, this particular chapter has a chapter administrator and a web host. We have travel built in for some of our officers to attend regional conferences. And we have printing expenses that go along with publications we might be providing our members, as well as normal print costs. So 2 different ways to present the same budget. One is a high-level summary of all your major budget categories. We still have $81,000 budgeted for revenue. We still have $64,000 in total expenses budgeted for a net income of $17,000. If we flip back to our detailed budget for just a second, I will highlight the fact that QuickBooks gives you ability to report across multiple years. And I told you that in this particular example, we have a 2-column budget that has 1 year of actual information and 1 year of budgeted information. But what I was able to do for this particular report is hide three other columns that had actual income and expense information from prior years. This is the basis from which we formulate our budget. We have 2009 actual numbers, 2010, 2011, right alongside 2012 actual numbers, which help comprise of our 2013-14 budget. So if we take a closer look at our income across different years, we'll see that in this particular chapter's case, the income has increased at a steadily pace along with membership. Program expenses, just as you might expect, as we've grown, we've made more in terms of revenue. We've invested more into the products and programs that we're providing our members. So costs have increased as well. But in terms of our net bottom line, across this 4-year trend, you'll see that in the first year, we lost almost $5,800. The second year was a little bit better. By year 3, we were up to $9,000 in net income. And by last year, this particular chapter had $15,150 in net income for the year. So again, 2 different ways to show the same budget, one in more detail, the other one more in a summarized fashion. So there's the 2 columns, last year's actual, this year's budget, and here's what your summary looks like. $40,000 in service revenue here in the summary, $40,000 in service revenue here in the detail. And by detail, we mean individual account numbers are broken out, such as here. We have program registration fees for members, registration fees for non-members, sponsorships, which give us a $40,000 total, versus here in our summary, just one line item for the total amount. The third type of report we'll take a look at today is a program report. We told you earlier that we are providing 4 different programs, which will give us $40,000 in net revenue. Here's your $40,000. Based on our 4-digit account numbers, we also added 3-digit program numbers so that we can distinguish between programs. So, for example, program 1, we assigned a program code of 100, program 2, 120, program 3, 130, program 4, 140. So if we take a look at individual programs, we see the total income for program 1 is budgeted at $7,000. Total expenses, $5,700, for a total net income for that particular program, program 1, of $1,300. Program 2, $9,000 in income, $2,800 in expenses for a net income of just about $6,000. Program 3 for this particular great chapter, budgeted income is $17,000. Budgeted expenses, $14,150 for a net income of just about $2,800. And lastly, program 4 with total budgeted income of $7,000, total expenses of $4,800, and a net surplus or net income of $2,200. So in total, 4 programs, $40,000 in revenue, $27,500 in expenses, giving us net income from just our program services of $12,500. So we've given you 3 separate examples of how to provide a budget. One in detail here. One in summary here. You have a nice little notes column which lays out exactly what you're spending your money on versus detail. You have each particular line item. And then lastly, you have program services all budgeted out so you can vet each particular program. For example, program 1, net income is $1,300. You might decide that you want to, because this is a valuable service that you offer your members, continue the program even though it's not generating a lot of income. You might want to look at your pricing. You might want to look at different ways to get more bodies in the seats. But these are the kinds of decisions you have to make as you look at individual programs and decide whether they're worth putting on or not. What should your major budget goals be? Ultimately, SMPS was created to serve our members by providing networking opportunities, offering quarterly professional development, and resources to help service marketers perform their jobs better. The unofficial theme in our office is the member experience. That simply means that the basis for almost every decision we make is with our members in mind. From a financial perspective, no organization engages in any business activity for the purposes of losing money. So, program budget goal number 1 is obviously to produce income. Goal number 2 is to provide a valuable service. And again, that service might be professional development, networking, research, resources in the form of white papers or books. Ultimately, the question you have to ask is, can we provide income while providing a service? In a perfect world, we would absolutely say yes and yes. Can we do both? But the reality is that doesn't always happen. The member experience is, above all else, our most important The member experience, above all else, is our most important benchmark in terms of the services we're providing for service marketers. The not-for-profit model exists such that an organization's primary purpose is not earnings, but in the chapter's case, serving our members. Always budget a net overall budget surplus or profit for any given year. This will allow your chapter to invest in its members in terms of offering higher level educational programming, more chapter outreach and membership recruitment, and or building up the chapter's reserves. The last topic we'll cover today is understanding reserves. What are reserves? Reserves are cash set aside that is not used to cover operating expenses. Adopt an investment policy that makes sense in terms of the stock versus liquid cash mix. You do this by finding several reputable investment managers or brokers. Compare their investment performance to those in the current economic landscape and consider other factors such as investment management fees, which vary from broker to broker. Once you've chosen an investment broker, consult with them about what a good investment mix might be for a typical not-for-profit organization. The Budget/Finance Committee should draft a policy that allows for allocation of stock, bond, and cash equivalents such as CDs or money market accounts in order to achieve its financial goals. 2013 was a record-breaking year for the stock market. The Dow Jones Industrial Average reached the 16,000 mark for the first time ever and has maintained that level to date. That stock index experienced right around a 23% increase between January and December of 2013. In terms of its simplest terms, that means that organizations invested in some portion of the Dow Jones Index experienced a very good year from an investment perspective. In the past 2 years, going back to January of 2012, the Dow has actually increased by 31%. That's the good news. The more sobering news is that it cannot possibly continue to grow at that rate. At least that's what our investment brokers tell us. In fact, it was just a little over 5 years ago that the U.S. economy tanked and the stock market right along with it. Families saw their 401k plans dissolve. Major companies went into the tank. The fact is that the stock market has actually recovered much faster than the economy as a whole, which is a bit of a head scratcher. Adopting and adhering to an investment policy will mitigate some of the risk associated with investing in stocks by having some money placed in guaranteed, albeit lower income producing instruments like bonds and certificates of deposit. Your investment advisor is there to help you negotiate the choppy waters of playing the investment game. Once selected, brokers act on your behalf and should do so in accordance with your investment policy. Some of the things that investment reserves are used for, they're used to cover rainy day expenses. For example, if you take a look at this particular program, Program 1, we said it was expected to garner $7,000 in revenue, $5,700 in expenses, for a total net income of $1,300. Well, what if that particular program didn't get sponsorship for that particular year? Now we have a $1,200 deficit for that particular program. That's just one example of what rainy day expenses might cover. Your investment reserves might also go to fund special projects. We mentioned this particular chapter, great chapter, has a website host. Your particular chapter may not have a website. You may be interested in building one, or you may have one that you're interested in overhauling. These are all types of special projects that might require you to dip into your reserves in order to fund that particular plan. Having a reserve fund also promotes long-term planning, putting money aside that you can subsequently invest in the chapter and in the membership at large is always a good thing. And a SMART goal is to have 50% of your annual budget in reserves. Keep in mind that this typically takes time, and it's a goal. It's not a mandate. It's just something that's a benchmark that you might strive to do. In terms of negotiating those choppy waters, just give you one quick example, showing you what the stock market looked like for 2013. Here's the graph of the 2013 Dow Jones Industrial Average as it stood back in January. If you follow the little ball, you'll see that the ride is not very smooth at all. Almost like a roller coaster. So this is the stock market, and this is what the stock market does. You'll see that while right now it sits at just about 16,500 as of the end of December, there was certainly a lot of downturns that the typical investor would need to ride out in order to sustain the gains that ultimately, as of the end of the year, had us here. That's why it's important, I should say, to have an extremely good investment policy, because you want to have lower risk financial instruments to mitigate the risk in downturns such as this one here that we're pointing to, or this one, or this one. But that's just a look at what the Dow Jones looked like over the course of 2013. At the end of the budget process, you begin to realize actual revenues and expenses, we say as a committee you should meet to review your results regularly. Regularly for you might be a monthly basis, it might be weekly, it might be quarterly, but you should always take a look at how you stand actual versus budgeted results. You should communicate those results with staff in order that you can make adjustments along the way if you're not meeting and achieving the goals that you set for this particular annual budget. And on the flip side, if you're doing much better in terms of revenue and expenses than you anticipated, there may be an opportunity to offer another program, in this particular case, a fifth program or sixth program for that particular chapter. Please don't hesitate to call if you need my assistance with any particular finance issue, be it budget, finance, tax, otherwise. I'm here. I hope this particular presentation met and served your needs. I hope you found it useful, and happy budgeting. Thank you.